Hey everybody, recently we talked about tax being your biggest cost. So then you've got this thing called tax deductions to talk about. And there's going to be a lot of videos at different times talking about tax deductions and whether it's a good tax deduction or a bad tax deduction. So in the picture, what we're looking at here is one really big tax deduction, depending on whether you have a job, self-employed, working for yourself, a small business or a bigger business. Could really be a bad idea to have a tax deduction or a big tax deduction. So I probably need to call the video the biggest mistake on tax deductions or something like that to be the truth of the matter. Let me explain. So let's imagine, now everybody's in a different position. Some people aren't working, some people are on, benefits, some people are on lower incomes, 50 grand a year, 70, 80, 100, 150, 200, and some people have got their business, but some people have got a job and a business as well. There's all sorts of different circumstances going on. So this isn't financial advice. This is just general information, and once you understand it, hopefully you can make it work for you and do a bit better. Now, having a business and being able to make tax deductions is awesome, definitely. But you want to be careful you're not making too many tax deductions. Sounds a bit odd, doesn't it, Now, obviously, you always want to operate in a legal way and only make the deductions that you can. That's why it's minimizing your tax by making the right deductions, but you might be making too many of the right deductions. So what do I mean? Okay, let's just say, for example, you were, some sort of self-employed, contract work, you're getting 200 or 300 grand a year, something along those lines. So you basically get paid on a set amount, on a tax invoice type thing. So we're gonna make up a figure. We're just gonna say $200,000 a year for a round number, right? $200,000 a year. And if you were to get paid $200,000 a year in Australia to yourself as an entity, so not to a company or whatever, gets complicated. I'm not doing a whole tax system rundown in this video, and I don't know everything about the tax system, but what I can tell you is as an individual entity, you can Google how much tax I'm going to pay on $200,000. You know the exact answer. The first 20 grand, it's a bit under that, but more or less, depends how much you make, because there's other low income benefits and whatever. 20 grand's tax free, and then it's slowly on a scale, and you'll be paying a lot of tax. I'm going to take a wild guess. I have not Googled it and checked. I could have. On $200,000 a year, you might pay, I don't know, 70 grand tax. Let me know how I went with that. I'm just taking a guess. Could be 60, 70. I don't think it'd be more than that. It'd be about 70, I think. Anyway, if you do make zero tax deductions, so you've earned, well, you might not have earned it, but you've got paid $200,000. Hope you had a laugh there, because a lot of people are getting paid and not earning what they're getting paid. That's for sure. That's a big problem. There's going to be so many videos. One more piece of the million-piece jigsaw puzzle. So 200 grand we'll call it earned. You're going to pay 70 grand tax, leaves $130,000 a year for you. Some people think, oh, that'd be awesome. Wish I could get that. That's pretty easy to get. So we'll get to that later. It's about keeping hold of it, because, like I said, tax is your biggest cost. You've got other big costs depending what decisions you make in business or in life in general. So many decisions are going to make the biggest difference in your financial position, and therefore your life and how you build it and what you get to do each day, what activities you get to do or what work you get to do. And I'm in no way saying that you should be not working. Everybody should do some sort of work that they like doing to provide help to the community and everybody in general and help people out, something like that. If everybody did that, we're all just helping each other and having an even playing field where, like I said, I've hinted at in earlier videos that, there's billionaires and there's people that are homeless on the street. To me, that just, how does that, so if I was running the show and I could control that, then obviously there'd be a limit on how wealthy people need to be. You do need to be rewarded for taking risks, but I'm going off topic now. A lot of that risk is borrowing money. Anyone can borrow money, get lucky or not. Some billionaires or whatever, millionaires, trillionaires, billionaires, whatever you want to be, they've gone broke several times. So you borrow all this money, it fails. And that's part of the lesson, apparently, and you just borrow it again, you borrow it again, and eventually it works out. Like, wouldn't it be good if we could all do that? And we kind of can, but guess what? They're busy working and we're going down a different path. You're at the crossroads now. It's decision time. I'm meant to be talking about tax and wrong tax deductions, and this is what happens with me. But I think you'll find whatever I've talked about, it's all been informative and a different way of thinking. So if you do like it, hit the like button, subscribe, turn the bell on, because I don't really want you to miss it. And to be quite honest, a lot of people are going to miss it, and what can you do? Tax. So I've really wasted 5 minutes of an 8-minute video blabbering like usual. So I'm going to have to get better at this. So I've just got to spit it out really. So a tax, say you said, oh, okay, you know what, I'm paying too much tax and I don't want to pay less tax. So you buy yourself a new car or you get it on lease or whatever, it creates another payment. Lease companies are there to make money as well. So they're going to make some money. Interest is going to make some money. Where you've got to get it serviced is going to make some money. Where you've got to get fuel for it, that fuel card, all these things are all going to make some money out of it. So if everybody's got to make some money out of it, do you really think that's the best way to do it? Anyway, don't answer yet. So let's just say you had the money and you purchased the vehicle. Either way, and it was one of those years where they had the 100% tax write-off or even the normal depreciation methods, 20%, whatever you want to do, right? So you're reducing your income down so there's less you pay tax on. So you don't get it all back. So that's the first thing you understand. Let's say this was a $100,000 vehicle and it was a year that you could write off a $100,000 capital purchase, you don't get to just keep $100,000. Your $200,000 income would go down to 100 and you'd still pay tax on that. So it's a bit complicated, but you're saving a lot of tax, but it's kind of like the amount you're claiming, you're still paying half and saving half. So it's like you're getting things half price. But it gets complicated because when you go to sell it later, let's say you looked after your car, you kept it all nice and clean and shiny, and you sold it 2 years later, you probably might even sell it for the same money or close to that, and then you just got to pay the tax back anyway. So was there really a tax deduction? But it cost you a lot on fuel, it cost you a lot on insurance, all these other costs that go with things, right? The more you spend, the bigger the number, the higher the interest rate if you've got a loan on it, more rego, more insurance, higher insurance values and higher premiums. I'm also going to talk about insurance in another video and better ways to do it where you can save some money, really get you thinking outside the square where you can save some money. Because like I said, what we want to focus on first is saving money and those decisions, because you're going to get rich just from doing that. Then we're going to talk about ways to make some money later on. So tax, you can make these tax deductions. You got to understand first, you don't get it all back. That's the first part. And if you're spending money to save money, after you make it, let's say you didn't buy the car and you said, okay, I made 200 grand this year, and the tax agent says, you're going to pay 70, you got to go spend some money. And you go, okay, I'll spend some money. What do I need that I can claim on tax? And he says, go buy some tools or something. So you go, okay, down to Total Tools, you go, Sydney Tools, Bunnings, wherever you go to buy your tools. And you spend 20 grand on tools. And you go, there you go, how's that? Beautiful. Oh yeah, that's good. You just saved yourself 10 grand. That's awesome. You saved 10 grand in tax, but you just spent another 10 grand that would be your money. So make sure you need those tools. Do you really need those tools? Because if you're just spending to make a tax deduction, you're on the hamster wheel of tax deductions, and this doesn't end well. This is going to take longer than 8 minutes. So, yep, you spent 20 grand on tools. The tax saving paid for half of it if you're earning 200 grand a year, rough ballpark numbers, but the other half's your money, right? So if you paid the tax, so there's this saying about, oh, mate, I'm happy the more tax I pay, it means I must be making a lot of money, right? People go, okay, that's one way to be. So what? You're contributing to the system and you get to keep the rest to do what you want, not necessarily a tax deduction. I mean, do your tools make you happy? You want to go and sit and play with your tools all day? I mean, get a life. Don't you want some of the money after tax so you can go on a holiday? The sort of things that you want to do that you can't claim on tax. You might want to go on a nice holiday if you've got a business that you can claim it on tax, even better, right? We're going to get to that later. I'm trying to be simple here. If you haven't got a business that you can claim a Caribbean cruise on tax, you might want some of that money so you can do that Caribbean cruise, because if you spend it, you're not having any, you get my picture. This is the point I'm trying to make. Every tax deduction, you don't get it all back. You're going to pay half and the tax department's going to pay the other half. Yep, no worries. you're going to end up with less money at the end of the year in your pocket. So that's the problem. Same thing with investment properties and stuff like that. We're going to talk more about that separately, but I really just wanted to make that point. Careful of your tax deductions, understand what it's really costing you. You know, like just quickly, investment properties, okay? Oh, you need this much money later and all that. We're going to talk about this in more detail, how much you need later and how many properties you need. And you're just on the hamster wheel for 40, 50 years of your life, paying the shortfall, negative geared on these mortgages, right? Paying the insurance, paying the agent, paying the this, paying that, pay everything that's broken and all the stress and drama. I'm going to whack some separate video, right? We'll talk about that negative gearing and property investment and renting them out later on another video. Point is, careful of your tax deductions. If they're good tax deductions, you actually need things and don't miss tax deductions. If there's something that you need for your business, then generally common sense would say, yep, you can claim it. Keep good records of these. Don't miss any of it because every single one of them is half priced. You get what I mean? So if you just, oh, it was only $5, well, that's $2.50. If you do that every day at the end of the year, what's 365 times $2.50? It's the old rule. What do you want me to give you? $1 million now? Or would you like me to give you $1 and double it every day for 2 months only? And you know what the answer is? Figure it out, do the sums, you might be surprised. And if you are, subscribe, turn the bell on. I've talked too long. We've got to get this in separate videos. Hope you liked it. I'll be looking at that like button. Comments, I'll be looking at the comments. I want to know who's listening. I want to know if people give us stuff, if they're learning. Otherwise, I've got to sort of try and do something different. But I reckon that was awesome. But, you know, the algorithm isn't going to like me or my videos and think that was awesome. So, bada bing, bada boom, good luck to me and good luck to you for listening. Catch ya.